Well, talking about the insurance crisis in California is probably long overdue, and I keep seeing it affect homeowners in California to the point where some of them can no longer sell their properties because of it. I want to share how we got here in the first place and why so many insurance companies are leaving the state of California, but also really go into how it is affecting detached homes specifically and attached condos because it's affecting them in different ways. I sell properties in San Diego, so I'm going to show you some of the most expensive areas to own homes in San Diego as far as insurance, but also I'm going to be offering some suggestions on how you could potentially reduce your insurance costs and even talk about the self-insurance option. Now, I am fully aware that California is not the only state with an insurance crisis. Florida is dealing with one as well. Texas, a lot of people have a really hard time getting insurance or it's very expensive due to the weather. So there are problems everywhere. However, this is the one that I see all the time because of selling properties in San Diego specifically. So that's what we're going to talk about in this video. So over the years, insurance has become a less and less profitable business year after year. And that is why companies like Farmers, State Farm, Nationwide, and Allstate have all started to either stop writing policies completely or reduce the number of policies that they write in California. Over the last few years, many homeowners in San Diego thought that they were doing just fine because they were able to afford their annual insurance premiums. And then they got letters in the mail that it was either going to skyrocket or it was going to be non-renewed completely, and they had to find a different carrier. Another interesting thing to note is that a few years ago, California essentially redrew those high fire zone maps. So areas that were not high fire, let's say back in 2020, 2021, they are now considered high fire, and thus everything changes as far as insurance for them. It's also understandable that one of the reasons that the insurance has gotten more expensive is because there are far less options when it comes to choosing an insurance carrier. When it comes to homeowners who have detached homes, location is essential. I almost hesitate to say this because I have seen some areas that I would not consider high fire at all still have issues getting insurance, but what we are led to believe is that location is essential and that areas that are more likely to experience a variety of major weather issues, but fire specifically, are going to be the most expensive. So in San Diego specifically, one example would be a lot of the north counties. We're talking San Marcos, Escondido, Poway, Rancho Bernardo, Rancho Penasquito, Scripps Ranch, a lot of those areas. Not that long ago though, I did sell a townhouse like right across the street from the water in downtown San Diego, and they were having issues getting insurance as well. There are also some parts of the South Bay, and then of course many parts of East County that are having homeowners have difficulties getting insurance as well. California's solution to helping homeowners who are in extremely high fire zones has been California Fair Plan, which is basically a government-backed insurance or like a last resort, last option for people who can't get insurance from other companies. The problem is for many people, California Fair Plan is expensive, coverage is limited, and the whole program may be going bankrupt. That might be a separate video though. So on a more specific note to how it is affecting homeowners of detached homes, what we're seeing a lot of is people, like I mentioned, thinking that they're doing fine as far as affording their properties, and then they're paying $200 a month, let's say, or $300 a month, and then all of a sudden it goes up to $500 a month, or it could be a lot more depending on where they are. The other thing is it is a factor when they go to sell the property, not so much in terms of restricting financing, but in terms of the desirability or what price the buyers even want to pay. Because let's say I'm listing a property and that homeowner has lived there for years, they've been lucky, they've kind of flew under the radar, their insurance costs have remained steady at $200 a month. Well, when they go to sell that property, obviously the buyer is going to get an entirely new insurance policy, maybe through that company. That may not be an option, maybe through a different company. It's not going to be $200 a month. It is going to be a lot more. So then even though it hasn't been affecting those homeowners, and they probably haven't even been thinking of it as an issue yet, the buyers are now determining what price they're going to pay, their budget, what they're comfortable with, and they're really factoring that in. So it ends up affecting what the homeowners can sell for. Let's talk about homeowners of attached condos next, because this is a big one. I have now seen multiple condo complexes where the homeowners really can't even sell the property because of lack of the master insurance policy. My mic died, so let's continue. The master insurance policy, if that is non-renewed or dropped,
then there is no major coverage for the entirety of the structure. And the policies that those homeowners have is too limited because it's just covering the interior. So what happens is when it comes to financing, nobody wants to finance condos that don't have a master insurance policy. You end up only being able to sell to people who are just paying all cash. And while that is an option, let's be honest, who wants to buy a condo that is uninsurable currently? So what ends up happening to a lot of those condo owners is that they just end up waiting. They want to sell, they can't sell right now, they wait until it's resolved. It may not be resolved for a long time because the situation's not really getting better. Sometimes they want to sell and instead they end up having to rent those properties out. But then that's a whole separate video where landlord-tenant laws are extremely unfavorable for the property owners in this state. Okay, what can you do to reduce your property insurance cost, assuming that you still have it? So here's a couple things. Number one is make sure that the insurance company that you have is aware of the upgrades of the home. And I don't just mean like the features like granite countertops, but is your home newer construction? Does it have fire sprinklers throughout the home? And are they aware of that? Because typically things like that can reduce the cost. Do you have a security system that you've told them about? Did you do an entirely new roof recently and are they aware of that? There is also an option that communities can take where communities are actually coming together. Multiple homeowners are taking action through companies like Firewise, or programs, I should say, like Firewise USA. And when they are all agreeing to do things like brush control, it can actually reduce insurance costs for them. Now, what is a self-insurance option that you might hear a lot about? Well, self-insuring is only basically if you own your home free and clear, you paid cash or you paid off your loan, because if you currently have a loan, that lender is going to require that you have actual insurance, not just self-insurance. And self-insurance is where you're basically setting aside money, either a lump sum or you're setting aside money every month for the case that there could be some kind of a disaster, and then you would pay for it yourself. But again, only an option if you own your home free and clear. Now, what's your experience in all of this? Are you a California homeowner? Let me know in the comments approximately what are you paying currently for your property insurance. I would be really, really curious to know because I have seen some great ranges depending on where you are in San Diego. Thanks for sticking with me through the mic issue. I'm going to get that bad boy charged. And in the meantime, I hope that you will consider subscribing. Thank you.